And welcome out, Halftime Crew. This is October 29th, 2019. We have quite a bit of a full cast without the Justice Brothers here. Well, I guess we do have one Justice Brother. We have myself, Coach Noah, Coach Gino, and Coach Mark. Coach Mark's going to be popping in here in a second. He's taking care of a few things lately. But the markets are kind of, I was talking with Noah in the prep, there's a lot of recycled headlines. You know, China trade moving forward, Brexit being delayed. But then there are a few that are actually notable. Things such as the consumer confidence failed to beat expectations. Saudi Aramco looks like it's actually going to IPO this coming Sunday. And then there was one other that I feel like I saw. Oh, the Boeing being on the Hill today. So right now, if you just turn on Bloomberg, CNBC, you'll see that they're interviewing on Congress the executives from Boeing to see, you know, what happened in that scandal and what's going on. So a little bit of recycled and a little bit of new headlines, but not
you
much.
Missed my favorite headline. You missed my favorite headline. That Tom Hanks is going to star in the Mr. Rogers movie. I saw a preview for it.
All right, Mark.
I did not see that headline.
So yesterday when you were talking about costumes, I decided to Google costume ideas.
Uh-huh.
And sexy Mr. Rogers did show up.
Listen, Mr. Rogers is one of my favorite human beings ever. His positivity is contagious. And I'm excited to see that movie. I'm a huge
Did you know, so Mr. Rogers, during, you know, some of the civil rights stuff that was going on, immediately when they like made some comment nationally about black actors, it was the next episode he filmed that he had the black mailman wash his feet.
Mr. Rogers
saying, like, he was sticking it to them, saying, you know what? No, they're like, screw all you racist people.
Yeah, like, Mr. Rogers was awesome. If you don't know Fred Rogers, and I think that's his real name. He played the character Mr. Rogers, kid program. When I grew up, he was an outstanding individual, just a great human being. There's a documentary on HBO or Showtime or something. There's a movie come out.
That's what David was just saying. That documentary was good. I've seen it.
It will put a smile on your face and give you hope for humanity. Just kudos to more Mr. Rogers.
I think residual Rogers is the only reason we haven't torn each other apart yet.
Mr. Rogers. He literally, I just love Mr. Rogers.
He's a hero.
I think back to I watched Mr. Rogers, Reading Rainbow. I watched that one. That was a good one. Did you ever watch that one? That was with what's that? It was also on Star Trek.
That might have been beyond my childhood years.
I think Mark and I grew up on Mr. Rogers, Sesame Street, and the Electric Company, perhaps.
Yep, you know. And the Electric Company. Yep.
Hey, you guys.
So sexy Mr. Rogers.
That showed up on the Google. So there you go. So, you know, he had a documentary last night on TV. A lot of comedians made fun of him. You see, like Eddie Murphy and who was the other one? Oh, a lot of them. And he said, well, I don't like it, but I did laugh, you know. And it's like, he's such an easy target, you know. So I remember the Eddie Murphy was pretty funny, though.
I remember that skit.
It was really funny, actually. But then right after that was Eddie Murphy Raw. And you're like, okay, he was pretty nice to Mr. Rogers. It could have been a lot worse. But also, you guys missed a big headline, you know, because the most important thing is California news. Katie Hill resigning. Katie Hill resigning. A Democrat being sex videos being thrown out there. She just resigned for bad image.
I thought you were talking about the power outages.
Same difference.
Same thing. Power outage. Democrats resigning. Same thing. California turns power off.
California wants to be the center of attention. It's just what they do.
Yeah. I mean, somebody started the fire just so they could be on the news. Yeah.
They're so progressive. They're outlawing electricity.
You got to run on your own rat wheel if you want electricity.
Well, speaking of that, you guys taking a look at natural gas?
Yeah.
Look at that pop.
You know, what really irritates me is I had some naked puts on natural gas that were expiring, and I was debating whether I should have rolled them out yesterday, and I decided not to let them expire so I could just sell some today. and then this happened. So now I got to wait.
Hey, we just went over this.
Go throw a put down there. Listen, we've been advocating natural gas for about a month.
But
now.
I just can't get the fill. I can't get the premium I would have yesterday. If I would have thrown a put yesterday, I can't get the same fill. So I'm just a little disappointed that I hesitated to throw one yesterday.
Cody, one of the biggest mistakes I've made in my trading life, time and time again, is that I have a good opportunity and I get a good price, and I'm like, and then I miss it, and it turns out to be profitable, not as profitable rate on return. But I miss out trade because I didn't get the best possible human setup on the most ideal entry ever. Learn from my mistakes.
How many times have you missed out on a great trade because you were squabbling over pennies on the fill?
Exactly. Like, listen,
stepping over a dollar to pick up a penny.
Yep.
So,
that's a pretty common problem, I think, traders. I think that's something I would dare say
all the time.
If we were to
called, there's a lot of names for it. It's called trading defensively and missing the offense. So when you trade defensively, you're too worried about saving money versus, it's kind of like Mark knows the difference playing poker. There's guys that fold too early when they have a good hand. It's when to be offensive, when to be defensive. A lot of defensive traders, it's like the guy that goes to the horse track and always bet on the third to show, It's like, why don't you go for the guy who bet the first place winner? Defensively means you want high probability and you like to win, versus offensively means I'm not care about winning. I just want big money, big payday. So defensive traders, are you defensive? Are you the guy that goes into a swing trade and turns it into a spread trade because you want to hedge it versus cashing in on the swing trade? Are you the guy that, I'm going to do a naked put because I can make $50, but darn it, if I would have done a long call on natural gas, I could have made 50,000, but it would have cost me $10 for that call. So which one are you, defensive or offensive?
Well, which one should you be? Risk on, risk off?
Well, that's the thing is if you got a target and you got a good directional trade, you go directional. That's the way it is. So in other words, when I see something with an ATR that's big and it's a big mover and it's setting up and it's going to move big and it's setting up and giving the odds that it's going to move in a direction, you got to play directional. Now, nothing wrong with selling puts to pay for that directional trade. But if you go back and go, look at all the premium I brought in for selling credit spreads and condors. If I use some of that premium just to buy a directional call or put, wow, look at the difference. Because nothing worse than the most common one is a covered call. Hey, if the stock doesn't go up, I still make money on my call expiring. And the stock went up big. And okay, they took my stock away and I made a little bit of money on a call. I could have made thousands. Nothing more psychologically damaging than going, I was right, but I didn't get paid for it. Who likes doing that? Being right or wrong and still not be worried about getting paid? Lawyers, they don't care if they make money or lose money as long as they're right. You know what I mean?
As long as those are billable hours.
Yeah, and they're going to argue it to the death. And that's because it's not about making money. It's fear of being wrong. Fear of being wrong. The fear of being wrong makes you defensive. So, there's times when you do a defensive trade and it's great when you have the consistency on those probability trades. But everybody knows when they do that naked put, because I'm a king of naked puts. I do tons of them. And you go, yeah, Apple's at 250. These naked puts I've been doing since it's 200, all the way down at 140. Yeah, they worked. They're great. But what if I had that call spread? That was like 5 years of naked puts right there in that one spread. Now that Apple's at 250 and it's done that $50 run in the last 2 months. When the market's bullish and it's saying direction, you got to go direction. So that's why indicators, internal indicators like the AR high low or RSI, I need it to be at a certain level to say, okay, I'm going directional. Like when the RSI is above 60, when the archipelago high low is above 100, not just 50. When all the sectors are bullish and the market's moving 1% a week, you got to go directional. When the market's moving, you got to go directional. Yes, you could still do your defensive plays and bring in the premiums, but you got to leave some room for the home run because the big money's made on directional. I love the consistency of cash flow, and that's great if it pays the bills. But most accounts, you have to do a lot of cash flow trades to pay the bills.
So that being said, Gino, this breakout, is this risk on?
Oh, in a breakout, you always go directional. A breakout, you go directional. Because why? It's telling you it doesn't get more bullish than this. We're at all-time highs. And now remember this. The S&P is the average of the sectors. So what I like to do is find what's the RSI, which is one of many indicators. What's the relative strength of the S&P right now? And look for a sector that has a better RSI. That means they're outpacing the S&P. They're better than the average, and they're leading the market. So where's the movement really at? And there you got it right there. I saw it. It was healthcare.
Let's see what we got there.
So what's the RSI of the market right now? 60?
Oh, I already have the RSI on there. How about that?
Yeah, if you have two RSIs, that can.
Yeah, I just doubled it up. I didn't think I had it on there, but hey, I doubled it up. So
confirmation of the first RSI.
So what you have to do is you have to add the two RSIs together and then
divide it by 2.
Yeah, divide it by 2. Yep.
That's a
healthcare is leading the way. Financials are right behind it. That's where your strength's coming from. You bet.
Yeah. Now, what's the worst RSI? Ooh,
utilities. So
Risk
money
off.
coming out of utilities
and real estate. They were the strongest going into the breakout. Now people are dumping them. So do you go bearish on real estate and utilities? No, not until you get a bearish signal.
First of all, you absolutely do not go bearish on real estate until the Fed switches course. Real estate, listen, when you're going to have market euphoria, defensive sectors are going to hit a short-term hit. But right now, those dividend-paying sectors, utilities, real estate, could they come down a little bit? Yeah, but the real propelling of those sectors this year has been because interest rates have been going down. That seems to be still on a trajectory to zero. So there is stability in those defensive dividend-paying sectors. Now, are they going to have the robust run-up in a bullish market? Probably not. Risk on, people are going to go to tech, people are going to go to all kinds of other stuff. But when there's those deeper pullbacks, those are actually probably buying opportunities as long as the Fed continues to go towards a zero interest rate policy.
That's probably true.
That's going to be interesting tomorrow.
Yeah, definitely. That's interesting. What would I see the odds were at this morning? 97% probability that they're going to go ahead with the rate cut. You think it's all priced in, or do you think we're going to actually see some life out of the market?
It's probably priced in.
Everybody's looking for those key words. Outlook. What's the outlook?
Go to the S&P, Cody. Go to the S&P. We had that breakout yesterday, which we talked about everywhere we could in our live shows, anywhere. That's a breakout. It was a clear breakout yesterday. We got a little bit of continuation today. That looks priced in. I don't know though. The market's euphoric right now. We were like adamant about that on this show yesterday. The market is risk on, euphoric. Don't try to guess where euphoria ends. So is it priced in? I guess, but that doesn't mean that the market can't use it as another excuse.
Well, we are closing above the highs. The volume's been below average on the last little push up above the resistance breakout. I think the idea of the Fed's pricing things in, but I think a lot of it comes down to how the statement comes out. Like a lot of traders are looking for those keywords. Like Gino said, they're looking for how dovish or hawkish the sentiment comes out, and whether or not they're going to be looking to do future rate cuts as well. So from a technical perspective, though, you got to trade what you see. And this was a conversation we were having in the lounge this morning. I'm skeptically bullish, but I'm still bullish.
Okay, listen, if Noah is bullish, then that is how euphoric the market is.
It forces a perma bear to be a bull.
Because Noah is our perma bear at tackle trading. And if Noah's bullish, he's just like, listen, this is just too crazy. What am I supposed to do? Even I have to be bullish today.
You got to. It breaks a high. I've been pounding it into people's heads for a long time. What do you do when it breaks resistance? You got to buy. So breaks above the high, it's time to buy.
Amen to that.
What you got to do. So we got a couple big fish coming out with earnings this week. Who's on the docket here? Apple's coming up.
Yeah.
Apple, a little bit of profit taking ahead of the earnings announcement. It's been on just a big green tear for the last month or so. And then today we're seeing some good profit taking here just ahead of their earnings. So that's, again, I just look at that as profit taking, just people taking profits before the earnings announcement. But other than that, what else has been in the news? Boeing's down a bit. They're on the hill today.
Yeah, they're on the hill today looking
AMD.
into the actual scandals. It actually looks like it says they're actually up, which is odd off of I guess it's a good news is bad news, but they're still sitting in what we thought was a kiss of death. It's kind of a bear pennant now is what I would call it. Where it hasn't broken either or, and it's starting to pinch. Not between moving averages, but that 9's coming down is one of them, and then that rising level right about 340-ish is where it just hasn't broken that. If you go down to an intraday, you can really see that it just any time it just will not break to the downside right now. I think it's just it's hard for people to go bearish on Boeing, even though there's a lot of negative news surrounding this.
Well, I think if it does break, it's got a pretty decent size drop. I mean, their earnings weren't that hot.
Oh, if it does break, absolutely. It's starting to put in such a hard support level that, yeah, if it were to break right where you are, if it were to break that level, that's an easy trigger to the downside.
It's an interesting setup. Definitely interesting setup. I like it from the daily time frame. Nice context, nice setup.
Quick, easy target right down to low of that candle, which looks about 320.
Absolutely. So NASDAQ's been leading the charge on the breakout here. But most energy I thought on the breakout, little inside candle today. I've been expecting the tech sector to do pretty strong. And then this is something we were talking about a little bit about the seasonality, Gino, with healthcare ripping strong and financials, coming in number 2. On the RSI ranking, the next 2 are industrials and basic materials. Not hit your seasonality off of your scouting report newsletter. Basic materials and industrials tend to lead the market in November and December, historically speaking. So a little bit of seasonality in there, and they're knocking up against those all-time highs. So is that something, Gino? We've got a handful of candidates out there from the industrial sector and the basic materials sector on the scouting reports.
Yeah. So industrials, depending on which website you look at, and materials, there's stocks that are in both. If you're looking at something like FinViz, you're going to find that they got stocks that you're like, wait a minute, that's some materials. I think Thinkorswim has it as industrials. So knowing which sector it's in, you got to kind of look at the companies, but looking at the XLI and the breakdown of those companies, which one is it heaviest weighted in?
Which one? What?
Which one is it heaviest weighted in on the holdings of that one?
On the holdings?
Yeah, I got it right here. I just lost it. It is.
You need to go to the newsletter to check that out.
Yeah, well, I'm going to go to the actual percent holdings on one of the here at Boeing. Boeing is the biggest holding of XLI. It's 8.8%. So think about this. Remember how you're looking at Boeing? It's aerospace, right? So the next one is 5%, Honeywell. If you took Boeing out of the picture, this thing would have already broke out.
Yeah, Honeywell's been running.
Yeah, I mean, it's 8% of the holding. It wipes out. It's about the same as the next 2 holdings on there: Union Pacific, United Technologies, all the way down to Caterpillar, Northrop Grumman. So do I agree with the weighting on it? No, but it's just the way it is, market cap weighted on XLI. But if you actually go to, like we're talking about yesterday, one second, let me go back to that. If you go to the BPI, which is the percentage of stocks that are actually bullish and bearish, let me get my reading on that. On industrials, I have 73% of the stocks are bullish, and it's up 4% today. So when I look at the BPI, especially if it gets over 75, which is only 2% away, that's a major breakout and it's starting to get pretty high. It gets up to about 90. Most of the stocks, 2/3 of the stocks are already bullish, which means this XLI, the actual ETF, is lagging. It's already broken out. Industrials have already broken out. Most of the stocks are bullish. And the biggest move as far as sectors today, let me just see which one we got. Utility still has 92% bullish. Healthcare was a 7% jump. There's 70% of the stocks are bullish. And the red was in discretionary a little bit. And the Dow 30. So discretionary is a little bit down today. Not bad. I'm still holding on to my discretionary outlook is bullish going into November, December. Staples, what do you got there? Neutral?
Yeah, Staples is relatively neutral. Discretionary, it's neutral to bullish. I think the Staples look a little bit more bullish than discretionary. discretionary's got this beautiful little triangle consolidation in there. And it's a little bit more exaggerated. So
yeah, because we got to remember, you're looking at the S&P 500, which is the baseline, the benchmark sectors, XLY, anything with XL. The spiders is the S&P. So you got to look at the breakdown of those. So by taking that extra step and find out how they're weighted, like being Boeing on XLI, imagine if that wasn't in there. It would be rip roaring. It's just maybe when it does finally kick in, if it does, and start going up, really add fuel to the fire on that. But really, if you look at that, Noah, real estate, like Mark said, I think we're going to get some recovery there. Gold, that's a safety play at 47 RSI. The dollar, those aren't really sectors. They're different markets. Utilities, that's the one I would look for possibly a breakdown there. And I'm starting to see it right there. What do you got, an M?
Yeah, it's got a double, triple top out there, and it's testing that low. So it's got to break that, I think, to really confirm the downward move. But it's below most, three of the moving averages and the key support zone right there. If it breaks, I see a sell-off down towards 61, 62.
Right. So just looking at the RSI, look how fast that was. Right away, we zeroed in on a bear sector and some bull sectors. So talking again about directional, when you're playing direction, play the ones that have the most movement, the most strength, the outperformers, the ones leading the market. And to find the ones leading the market, you got to know what the market is. So you find out what the market is, the RSI or the trend. Another way I used to do it, Noah, and you do this too, is you draw your channels on the market, and you can tell when you look at a channel on a market versus a sector, which one has the highest angle, highest degree, which one's moving up the most. Now, utilities is deceiving, by the way. If you look at that big run there, it's only moving, 60 cents a day? It's small moves, but it's pretty continuous, right?
Yeah. It's
kind Versus of slow, if you look
slow,
at
steady grinder, right?
That's pretty good for a year.
Well, same is true with real estate. I mean, the actual percentage move over time it's nice, but it's been a kind of a slow, steady grind. It's not like it's super exciting and it's lower ATRs.
So you look at that and you go, yeah, it's definitely directional, but at 60 cents a day, I have to do a lot of shares to hit my goal for my target and my profit. So you have to dig in and find a stock that has a bigger movement per day, a bigger ATR. So if you're directional, you find the sector and then find the one that moves the most in that sector, the most volatile. If you're non-directional, you find the one that doesn't move a lot, has a small ATR. You don't want a volatile stock with a big ATR on a covered call. You just don't want that. It'll give you a good premium, but the stock going up and down will drive you nuts. And so looking at those sectors like utilities, you got to find one that has a better ATR. But now if you go into healthcare, for example, it's $1. Now, one of my rules, if I'm swing trading, I don't even touch the stock unless it moves $1 a day. And the old rule, old school, we're talking years ago, people wouldn't even touch it unless it would move the distance of a strike price. Now, back in the day, I don't know if you guys remember this, strike prices were like $2.50 away.
Oh yeah, that was on the liquid stocks. Otherwise, they were $5 apart.
Yeah, so up to 25, they were $2.50 away. From 25 to I think about 100, they're $5 away apart.
And then you got up above 200, it was only $10 strikes.
Oh, I think above 100, there are 10 points in between.
Yeah.
So what that means is you wanted to buy the first one in the money, but it was a long way if you bought one out of the money to get it in the money. So yeah, it was like, wow, you're buying way out of the money. Well, you didn't have a choice. It was either expensive or way out of the money on those 10-point ones. And so spreads were really important. Sometimes you can't even do a spread because you buy an at the money at 150 and to sell the 160, there's no premium. So you had to make it work. You needed a stock that can hit the next strike price in the next 2 ATRs, And so it always stuck with me. Can it get to the next strike price? Nowadays, you don't have to worry about it.
That's a huge thing for me when I'm looking at directional swing trades as well. I want to make sure the options are liquid, but also can it move from out of the money to in the money? That's one of my favorite setups in the world.
Right. So you look at the options and you're like, because what happens if you're not familiar with options is this: if an option's out of the money, as it gets to at the money, that's when it's primed, it's ripened, it's fluffed up, it's got all the time premium in it. That's really when you want to dump it, when it's at the money. because that's where the gamma's jumped up the most. Or you're stuck with buying in the money and getting a nice high delta from the start. So, back in the day, I really liked how it was structured because it made you do more research and it made you learn the options better. It really did. Like Noah said, you kind of gauge, okay, when is this going to be in the money? How many days does it need to move? Oh my God, that option's not even going to make it through my spread unless it has 4 days of continuous ATR. It has to ATR. And then you look at the ATR and you go, oh, 50 cents. And that's what's amazing, though, is I sit down with students and they swing trade or day trade or scalp. Or when I was teaching day trading and scalping, I would say, what's your goal for the day? And somebody would say $300. If I can make $300, I'm going to walk away from the computer and go surfing. Great, let's do that. Which stock we picking? This one here. How much do you think it'll move in the next half an hour? Okay, 15 cents. How many shares do you need to buy in order to make $300? Oh, I can't afford that. Okay, then the wrong ATR. It's the wrong ATR. You got to find one with a bigger ATR. So even if they were right, they weren't going to hit their goals. It's all basic logic, math, position,
That's
sizing.
Beautiful lesson.
Well, yeah, I used to sit and create my list of tradable stocks that I could afford that had the right ATR. Something else I used to do, I used to take the ATR and divide it by the stock price, and I needed a 3% move minimum.
That's a good one. Show that. Can you break that down, what you're talking about? Because that right there is golden.
Yeah, right there. That's kind of a fun concept. So basically, you just take ATR. So if I've got the XLV right here, and this is an ETF, so it's not a huge mover, but it's bigger than utilities, right? So it's got a $1.09 ATR, so it's $1.09. But the stock price, the sticker price on the stock's $94.40. So you divide that by $94.40, and that pops out to 1.15%. Well, that's not going to be most ideal for a swing trade. Now, this has $1 strike prices. You go look at the trade tab, and you got probably 50-cent strike prices. $1 strikes out in January. I bet the weeklies have 50-cent strikes.
So just based on the stock, yeah, if you're right, you can make 1% a day.
Right. And so one of my favorite things in the world was to go find stocks that had 3% was my sweet spot. I'd find them up to 5%, and those were pretty volatile. But if it didn't move at least 2% on an ATR move, I didn't think it was a good day trading instrument.
A good day trading, meaning a good directional trade.
Good directional trading instrument to get those kinds of movements. So yeah.
See, that's what amazes me. There's people that have favorite stocks and they're like, oh, I hope the stock moves up. And I'm like, well, it's only moving a certain percent a day. And then you got to get in the option math of it. But yeah, you're like, okay, for example, here's a great lesson. This is a great one right here. A lot of schools on swing trading, they play it safe by teaching when you buy a call or put. Most people say buy the first strike in the money or a 60 delta. Now, if you've been a member of Maverick Traders, Trader's Edge, I could teach me to trade. I could go back to many, Darlene Nelson, all these spread traders, Quantum Vision, all these things I've taken, courses, books, day trading radio. It's funny, the amateur will go out and buy the cheap option out of the money. And then they'll tell them, listen, you're not going to make money because you have a small delta. You need a bigger delta. You need to buy the 60 delta. The truth of the matter is you should buy the delta based on the ATR. So in other words, if a stock moves $2 a day, and let's say, Noah, you decide to buy the 30 delta, and I buy a stock with a half the ATR, it's a 1 ATR, and I buy a 60 delta, and we're both right, we made the same amount of money. Because yours moves $2 on a 30 delta, that's $60. Mine moves $1 on a 60 delta, that's $60. What's the frickin' difference, right? Well, here's the thing. Where do you decide when do I buy that lower delta? Because as you start getting up in ATRs, like Apple's got an ATR of 3.7. Why? Because it's an expensive stock. If it was a $25 stock, do you know that would only be 37-cent move? So you divide Apple by 10, divide the ATR by 10. So you're looking at a 37% move. Don't worry, Cody. I'm not going to get into the Pythagorean theorem, okay? he's doing the math. I can see it. So, what happens is, what ATR do you need? So based on your account size, you go, hey, I need this ATR, and its stock has to be a certain price. And what Noah did was such a time saver. He made himself a watch list of These are my swing trading stocks because they have a certain ATR and I can afford them.
Yeah.
So when you find out what stocks you can afford, like on a $3.72 ATR, that's great. That's a directional. But can I afford 100 shares of Apple? And if I can't, I got to drop down and do calls. Can I afford calls? If I can't, I got to do a call spread. If I can't, can I afford a call spread? If I can't, I got to do a call condor. Can I afford a call condor? If I can't, I drop down to a call fly. So where, knowing that education, that'll allow me to do it. But every time I drop down to a cheaper strategy so I can afford it, I lower my delta. So, okay, my rule is this, and this works for me, not everybody. I buy a 60 delta on a swing trade if it has an ATR 1 to 1.5. But if that ATR is 2.5 or better, it's a mover. I'm buying a 30 delta, period. The math works, and that's how it's taught. Now, if you know how to do spreads, you're going to get a 25 delta on a call spread. That's just the numbers we usually use, 25 or 30. And yeah, the same thing. So think about this. What's the difference? Most people, when they trade Apple, are going to do call spreads, right? Like a bull call spread is what? 25 delta, 30 delta. You never get less than that. What's the difference between that and just buying a 30 delta call? Well, the call spread's a little cheaper and it's more for a longer term. You're going to get a better gamma on the long call for swing trading. That's what it's about. So if you can't afford the 60 delta, you jump on the 30 delta. And is that going to be enough times your ATR? So me, think about it. One call is good for me on Apple because what's 3.7 times a 30 delta? That's $100. It's over $100 right there. So I can make $100 on a $1 move or one ATR move. So if that's my goal, fine. So again, simple lesson, breaking it down, making it simple. What's your ATR? What's your delta? Or what's your ATR and how many shares can you afford? That's all you can expect to make if you're right. And that's on the average daily move. Does that make sense?
Oh yeah, absolutely.
That was a beautiful lesson. Just I wasn't expecting it to go that in depth here. Guys, there were some definite Geno gems and Noah nuggets in that right there. Is that understanding how the ATR affects the movement and how that affects how you should be looking to play your options. That was a beautiful lesson.
Are we just a company of
I was expecting to talk the market. Next thing you know, we get into a deep dive, guys.
There you go. And that probably.
Well,
now, it's a problem, Cody. Everybody's going to go out and buy the 30 deltas from now on. And they're going to go, man, those options suck.
It's got to
Noah
be
nuggets, Geno gems, Cody Colonel. Cody, what's Cody? Cody's
Mark's moments.
Mark's moments.
Mark's moments. I like
Mark's
it.
moments.
I thought you said Mark's mullet. I was like, what?
Also,
I don't have enough hair to grow a mullet. If I could grow a mullet, I would. Don't worry, I would.
If he could grow a mullet, it would be a comb over.
So I'd get my Billy Ray on.
It would be a comb over.
I've seen that before.
Don't comb over. When you're going bald, just embrace it.
Mark's moments and
embrace it. Don't fight it. Don't try to hide it. Just embrace it. Just go with it.
I like it. Well, that's a pretty good segue into our, what are we going to do? Rapid fire here?
Well, go ahead and take it there, Noah.
Hey, I just felt like it was a good segue. We never did come up with a good Cody's comments.
I don't know how going bald to rapid
Cody's
fire.
comments.
Cody's comments. There you go. Cody's comments.
Cody's comments. I don't know if that's really, it's just generic.
That's not necessarily a good thing. That could be a bad thing.
Cody's saying stuff.
Cody's comments. It's like, darn. You could have stayed out of that one, Cody. All right, well, guys, we are getting into our rapid fire segment. If you've never been with us before when we do this, what we're going to do is put your ticker symbol in the chat for anything you want a very quick analysis on. As you can see, we already have a couple students putting their ticker symbols in the chat. All we're going to do is a quick, just 5-second. We're going to look at the charts. We're going to shuffle through the coaches and give you our short thoughts. Now, we might skip Mark because Mark can't do 5 seconds. He always goes 2 minutes. But
I reject the whole premise of rapid fire. So
rapid fire is solely technical. So we are looking at technicals of these charts and what we see. And from that, guys, we have our first ticker symbol coming in with Target. Noah, take us away.
So Target, this is one we talked about briefly in the Traders Lounge this morning. And it's
I like it when you say Target. So
Target.
the way you say it is just
Target.
very
It really
soothing.
is a nice place to shop. It's got a nice little bull pullback into a rising moving average. I don't know if Mark's going to pull the trigger on this because it did go down below his 9 and his 20 there. That's a rising 50. But I'd say you look overall setup bullish, especially when you consider, holiday buying season. Consumer sentiment's off a little bit, but if it holds this 50 period moving average and gives you a confirmation back up above that 9 and that 20, about the 110.60 ballpark, you might have the confirmation you're looking for.
See, that analysis was so much better than 5 seconds of, oh, blah, blah, blah. Like, he did a great job. It took him about a minute. So maybe you should.
Yeah, you actually understand what he's saying.
We need to rebrand rapid fire into something else.
Semi-automatic fire.
So,
what's next?
I mean, if we're going to rapid fire, just look at the RSI. It's above 60 bullish.
All right, Home Depot's next.
Who's giving the analysis on that?
Gino, what do you got on Home Depot?
Well, home builders are on fire. Real estate's going to bounce and go back up. That's my outlook. Home Depot's going to benefit from the real estate market. It's in that sector. So it's bullish, and I'm expecting a breakout here even before earnings.
All right, let's move on to MO. Let's see, Altria Group. What do we see on Altria Group?
It's a hard one.
I see earnings.
Yep. Well, yeah, it's hard to do anything right before earnings. You can't do much of anything there.
That is a reversal pattern. It was down, 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 down. It's clearly run up, violated all the moving averages. It's got a bull pullback on it, but you're all heading right into earnings. Again, they're recovering off of some, negative news, but I wouldn't bet against them long term. And again, they do pay a lovely dividend.
Very well. Next, we go on to Starbucks. Mark, what do you got?
Oh, I thought I was excluded. I want to do my own trading.
No, you're here.
All right, deeper. I don't mind deeper pullbacks, but when I get deeper pullbacks, in fact, this is where I get excited. I am definitely the biggest bottom feeder at Tackle Trading. Give me a weekly chart. Give me a 20 weekly moving average. Which
20 weekly, 20 period?
20 weekly. I would like a 9 and a 20, but a 20 is sufficient.
I can get a 9 on there too while I'm at it, eh?
Yeah. Okay, because right now, like, there's some very short-term technical setups, but right now the market's breaking out. So from a top-down perspective, I'm not really looking to do bearish trades. Like, maybe something will pop out and just be like, oh, that's too good to pass up. But as a general rule, when the market's breaking out, when the market has these huge bullish signals, I'm going to put my bull glasses on and look at things from a bullish perspective. So a big cap company like Starbucks, which some people might want to get at a cheaper level, going to look for a reversal pattern to form here. All right, that should be good here. For me, though, reversal patterns have to come in a different way. First of all, I'm going to look for horizontal support. Do you see any really solid, oh my gosh, that is a great short-term support level that it's going to about to come down to from a horizontal perspective?
Tiny, but it's not impressive.
Yeah, it's not impressive. Like I need something impressive. I don't just need a little bit. I want something impressive. So does anyone, I mean, we don't really have that, do we? Where that safety valve where support might form.
Oh, I know Noah's throwing a Fibonacci on there.
I'm already in my head, Gino. I'm already drawing my Fibonacci.
You're drawing your Fibonacci.
Yeah, I'm already there. So.
Okay, so absent that huge support level that I can bet on, I got to have a good old-fashioned momentum reversal. And I have to have that on the weekly chart. And in this particular setup, that might take 2-3 months if it occurs, because it's got to come back above the 20 weekly. It's got to come back above that 9 weekly. You got to get a shift, cross a momentum. And that takes a long time usually to develop in this particular setup where you've had a sharp sell-off. You don't have a horizontal, got to have an actual, and that type of setup is also usually a pretty good swing trading bullish reversal setup as well. So it's a while for Starbucks. It's a while.
Probably. Then they got the earnings announcement coming up here tomorrow.
Oh, definitely got to watch that then. Next, we have Home, which I believe falls right into the category of the home builders that have been doing well, except for this one's been getting beat up and it's starting to show a slight reversal. I believe we actually had this on one of our reports over the weekend that we are looking for this thing to possibly break out above that 1050, I think it was, that barrier.
Yep.
But it is actually breaking the opposite way. So we never actually triggered into that. Now, Jimbo, I see that you're putting that ticker in there. So I'm hoping you didn't pull the trigger early because you know better. But if you are and you're getting beat up, you should have been stopped out by now.
Yeah, if that did get triggered, you're putting an aggressive trigger in above the highs, which is certainly possible, depending on where you put your trigger.
But then you should have just been stopped out.
Yeah, didn't quite clear the gap. Should have been stopped out. If it's still dropping, you got your rising 20, but at this point in time, you got a lot of downward momentum.
Now, Jimbo might be looking at that. He sent me a few emails to team at Tackle Trading, and I have a hard time getting to like detailed emails, Jimbo, but I'll get around to it eventually. He might be looking at it from a naked put long-term perspective.
Oh, I would throw a naked put on that. If you can get a good premium down at 6 or so, I'd throw a naked put on that.
1055 trigger. That's exactly where the high is. It's like you caught the top. If you did that,
you caught
impressive.
If
you got the top, impressive. I've done that before.
Jimbo, It is really hard to catch the top, but you might have done it there. Congratulations.
Well played.
All right.
I would not normally make fun of a trader catching the top, except Jimbo has a delightful personality and knows it's all in good fun.
There you go.
Absolutely. All right. Next is Pfizer again with Jimbo. Did he get beat up again on that one? That looks like a clean breakout to me.
Jimbo's a contrarian indicator.
A contrarian.
That's why I follow him on Twitter.
Oh, I think that's a fantastic breakout. Trigger in. I see no problem with this taking the reversal off of an earnings report. I want to see what it does tomorrow, whether or not it's going to fill the gap and give us a secondary entry, or if it's going to continue to the upside.
No, and for individual, one of the more interesting things here is because I was really pounding the table, and a lot of people got into Pfizer based on some boomerang type things. How would you? My question to you, and this might be applicable. This is a question from Mark J in SL. Let's say your Pfizer is in the money. Your calls that you sold when you started cash flowing it. What do you do here?
Oh, that's a good question.
Because when normally, all things being equal, I'll just get called out, winning trade, I'll move on to another one, maybe lob a naked put. Do you see anything that would warrant a more aggressive?
Gino's got a pretty good rule for rolling your calls up. Like if you can extend the gain and you can make twice as much as it costs you to buy back the call, might be worthwhile. Otherwise, I'll just let him call me out. What's your rule on that specifically? I don't want to misquote you.
So what strategy are you looking at?
So let's assume I have own Pfizer, have calls that are now in the money.
Okay, so if you roll your call up to the next strike, what is it, $1 strike? Does it increase?
Pfizer has dollar strikes.
So let's say you're rolling your 36 to 37? Or whatever it is. Let's say you're Sometimes you can roll it to the same strike and usually get a credit. You know what I mean? You can roll it to the same strike and get a credit, usually, even if you go out a week. And that's fine because there's nothing wrong with doing in the money cover calls. You're getting the time value. But when you start getting a nickel or a dime, it's not worth it. And what happens when you're getting deep in the money and you know they're going to yank your stock from you, it's best to try to roll it up a strike so they take it away at a higher price so you get more money for the stock. So when you roll it up to the next strike price, sometimes it's not a credit, it's a debit. So what I do is I have a rule. If I can roll it up to the next strike and it's a debit, how much am I willing to pay to do that? Well, think about it. If I roll it from 35 to 36, I'll make a $1 more on the stock when they take it away. So if it costs me 50 cents, that's a good return.
That is an excellent rule.
I mean, if I spend 50 cents to make $1, now here's the thing. What if it comes back down? Because now you got more time on your hands. So sometimes you go, well, I'm not getting 50 cents. I got to go 2 weeks out. And I'm only getting 50. It's costing me 55. I go 3 weeks out. How far will I roll it? I personally don't like to roll it past like 35 days. Some people go 6 weeks. Tyler, he likes going 60 days. He's more patient than me. But here's the thing. Draw a line. Draw a line on how far you're going to go out and what's my debit. And is that a good return if I have to pay for it? And, sometimes like I take in consideration too, like I had this happen on AT&T. Do I want to spend 50 cents to roll it up a strike? And I went from 34 to 35 on AT&T, or was it 34.50 to 30? No, let's say I go 34.50 to 35. It's 50 cents. I don't mind spending 20, 25 cents because I'll make an extra 50 cents. They also paid a dividend in that time frame. That dividend made up for my debit. You know what I mean? And when it does start pulling back, Mark, and gets at the money, you'll see the time value come back into it. And then you'll just start rolling it up again. But another thing, guys, since it's earnings season, the best time to roll is right before earnings, because that's when you're going to get the premiums. That's when you're going to see the credits. Don't wait for after earnings to roll it. Roll it before, as you get those premiums. You can always roll it back down. You can always roll it back down if the stock goes down. But yeah, it's an investment. Remember, it's an investment. When it comes to debits, think like an investor.
Absolutely love that. Next stock is FCX.
FCX.
I believe, Noah, this is your turn again. What do you got?
Well, overall bearish downtrend from a weekly chart perspective. It's still making the lower lows and lower highs. You are seeing a slowdown and a double bottom. So you see a possible forming W out here. And again, with basic materials, I think if demand for gold pops up, you probably have some upside here, but you got that overhead 200. So really, I'd like to see it above the 200 before I go full-blown bullish, but it might be a decent candidate for a short, very small directional trade. But your target's limited up to $11 or so.
All righty. After that, we have Match. And I'm going to give this to Mark just because there's always been a running joke with Mark and Match.
No, there's not been a running joke. I'm a big fan of the company. Listen. When Match is down?
Because you haven't been on it.
Because March is no longer on it. Exactly.
That's all I'm saying. That was a running joke, is that when Match is up, is because Mark's on it. Match is down, Mark's on
I know, seriously. I need to get back on there. I need to get back on there.
Demand, Mark,
I'm in the mood for a crush. I'm in the mood, I don't know.
Just let me know. I want to do a little insider trading. Let me know when you're going to get back on so I can buy some Match.
I will. Listen, I'm not there yet, I'm not there
Mark,
yet.
don't be afraid of Match, man. You got to let yourself be loved.
Yeah.
All right, well, what are you seeing here on the chart?
Anyways, big fan of the company, though. Big, huge fan. Got a little joke. Now, one thing you need to know about Match. This is one of the things. When you're going to invest and know a company, I like to know it. Just intimately know it. And whenever Facebook news of Facebook's dating service comes out, Match gets a hit. Happens each and every time because the investing community is dumb. And the Facebook dating service offers no threat. It is absolutely terrible as far as a first-line competitor. Now, there might be some merit to, listen, I'm a dating expert over the last couple of years on these services, and Facebook does not offer the competitive theme to the Match brands that Match offers, but gets a jolt. But what did you see off that jolt? You've seen some stability. And while it's rough, go to a weekly chart. This range at about $70, it's treated it really well from a technical perspective whenever it's came down here. So it's came down several times now at about $70, keeps finding support. We're getting a lot of tests from a technical perspective here. Now, it is setting up, rewind to Starbucks, which we had a few minutes ago, how it takes long, you fall below that 20 weekly and how it can take months to develop to that next setup. Well, we're further along in the process on Match of that reversal type setup where those longer term weekly moving averages are evening out. So if you can get above that 20 weekly and then get a confirmation candle, becomes a really, really, really good swing trading candidate. Long-term, huge fan, stability, cash flow, whatever you want to do to approach. But you're starting to get a potential reversal swing trading setup on Match as well. From a bearish side, that support level is critical. It's absolutely 100% critical.
Some good analysis, Mark.
I really like it. Yes, absolutely.
I'd go out with you if I was on Match.
Another one.
No, if only I went that way.
I like your
if only I went that
was
way.
Good. But how about another one of Mark's favorite stocks? What was it? Beyond Meat.
Now, that piece of trash company, Like, if you could only short it and find a great bearish strategy, that thing was the epitome of just investor stupidity in 2019. Like, oh my gosh, let's run it. But there was no good way to short it. The borrowing fees were outrageous. The puts were outrageous. Yep. And so it's one of those like situations from a trading perspective. You're like, how do I make money here? And the option market and the shorting market was really, really difficult on Beyond Meat. Even though like everybody that was an analysis, like this wasn't some special insight on tackle trading that Beyond Meat's overvalued. This is crazy. Everybody thought that. Like everybody thought that.
Well, it just struck me as odd that it was so it was so impossible to really trade effectively. Like you said, the borrowing fees were outrageous. The put options were way inflated. The bid ask spreads were nasty. Like it just made, I wanted to trade it, but I just didn't I just didn't.
Oh, I lost money trying to figure it out because I was like, how, and then I finally said, listen, just go back to your boring normal thing. Yeah, I mean, how's that? So, I lost money trying to short it.
When was the IPO on this? What day?
It's about a year ago, wasn't it?
No, less than that.
Oh, it was. Has it only been out?
Let me show you what happened here. This is a great lesson. It's a great lesson. It's in the news today, and hopefully everybody caught it. And this is a great lesson for the CEO, who's definitely needs to stay a CEO and not a trader. Is IPO. You always find out when's the 3-month mark and when's the 6-month mark. The 3-month mark is the first unlock period. So go 3 months out. When was it?
Right there.
There you go. What is that? That's insiders allowed to dump their shares now, the 3-month. Then the next lockout period is 6 months.
I got a comment. You know what happened 3 months ago? As a way to have some of those insiders get more money, and this is when I turned on the company entirely. They issued more shares. They IPO'd, it ran up, and then they issued more shares of the company so that some of those people could get their money. And I turned on this company hard at that point. It's like when you issue more shares, get out of my world. Get out of my world, because you're devaluing the current value of existing shares for shareholders. I hate that.
Oversupply.
With a tremendous passion. And this is the inevitable result. Beyond Meat might have a good product, whatever. I don't want to discuss that. How they handled that situation is absolutely, from an investor standpoint, will not invest in this company until the current management gets out. Because you issue more shares, you better have a damn good reason. And it's not to pay off your existing people so they can get paid before the lockout period's over.
Yeah, why not do a stock split?
Now, I need to go feed my Mr. Rogers fish to calm down. Talking Beyond Meat.
So 6-month mark. The 6th month is the next dump for insiders. That's coming up next week. So, and then so the big news was this: the CEO says he'll never sell his shares. Yeah, he's not a good investor.
All right, let's look at AMRN, and then after that, we're gonna look at. I already looked at Pfizer. After that, I think we're done.
AMRN.
Actually, no, we got 2 more after that, I see. And then
we'll pretty neutral. I mean, just, whole history here. It's kind of came on the scene back in October, big gap up. It's been oscillating between highs of 23 and lows of 14. I don't have a real strong directional bias on it. Plus earnings is coming out.
What's the IV on that? You don't have it on your chart.
Oh, it's high. It's quite high. Might be a decent volatility play.
And Beyond
Meat, that's what I'm thinking. Yeah, volatility play possibly with that one.
Beyond Meat, I will forgive everything if you make a McRib Beyond Meat burger.
Oh, then I'm buying their stock.
Then
McRib can have its own stock symbol. It really can.
So all right, let's see. TCEHY. That's a 5 ticker.
TCEHY. Tencent Holdings Limited.
Never heard this.
It's a Chinese. They own. What do they own? They own a lot of property. I want to say they own a big video game property too. But internet, online. They're huge. This is not a small company. You're dealing with a really, really large China. I gotta know. Give me 1 second. I'll Google their holdings. They own something that I actually am a big fan of. Analyze it.
Very neutral, kind of gappy. No, what I see a dividend number there, but what is that? Once a year? Is that just because it's Chinese holdings company? That's odd to me.
No, they own a lot of internet-based services. It's now that's why they're a video game company, and they have a deal with Blizzard for Warcraft in China. That's why. That was what I was trying to remember. But they're a big company. They own a lot of internet advertising, online type companies. So they're a big deal.
Are these the guys who own the social credit?
God, they own so much. It's hard. They also own. That's what it was. Okay, it wasn't Warcraft. They own a stake in Fortnite.
Oh, is Fortnite still a thing? I'm not a gamer, so I don't know.
Number one, Googled Halloween costume on the internet.
Sexy Fortnite. Mr. Rogers.
Well, it's not Sexy Mr. Rogers, although it should be. It's Fortnite. Fortnite is the number one Googled Halloween costume. So
what do you call Mark Justice in a cardigan? Sexy Mr. Rogers.
I need to buy a car. Liz, I would love to have Mr. Rogers' temperament. I do not.
Okay,
Mr. Rogers would not get upset at Beyond Meat.
Or the guy that just auctioned his off from what was that band in Washington? Oh, come on, what is it? He just had the big auction, $300,000 for his cardigan. Somebody in the audience knows.
No idea.
Really?
No idea. All right, well, while we try to figure that out, what are our thoughts on this company here, this holdings? I just see a neutral pattern, nothing I can really do to trade this unless I'm doing just cash flow strategies. Any disagreement on that?
Which one, this one?
Yeah, the one we're currently on.
Oh, 10 cents?
Oh, boy, I just don't know enough about it. It's one of those, it's got a gapping personality disorder. So whenever I see gapping personality disorder, I tend to not want to trade it.
Whenever a Chinese company has a secondary listing on U.S. exchanges, it's always going to have gapping problems. So usually I'm with Noah. I don't really like to trade. I like the fluidity of normal charts. Gaps can just throw off so many things and the little nuances on how you manage a trade. So
I figured out what Gina was talking about. Kurt Cobain's sweater sold for $334,000 at auction.
Yeah, you guys didn't see that?
That sweater's a famous sweater.
That was worth it. That was.
Now I don't know if it's as famous as Mr. Rogers' sweater, but that's a pretty famous sweater.
Well, do you think Mr. Rogers' sweater will sell for $334,000?
Probably not.
I don't know.
I think he had a lot of sweaters.
He had a whole closet full of them and tennis shoes that he could switch.
Well, I was watching the episode last night when his zipper didn't work on one of his sweaters. So he came back to it later during the show and started messing with it. He's like, well, that zipper didn't work. Let's go back and try it again. He started getting frustrated.
Angry Mr. Rogers.
All right, last stock. Let's end with Planet Fitness, PLNT. I actually want to take this one. Gino, if you sounded excited as well, but this was a darling of mine where I saw the clear entry earlier this year, back when it broke 57, I believe it was, or no, right when it broke that 60 mark, right in there. So I actually got fooled in initially, but then held it through the rise. And this was a darling that I was selling covered calls on as a long-term investment and cash flow strategy. Where I dumped my shares and exited my position was on the large volume of breaking that 50-day moving average. Now I'm starting to see it kind of start rounding out and turning around on a big weekly pattern right as earnings are starting to come up. So I'm getting interested in Planet Fitness again
look at the stability when it crossed that 20 weekly, which I mentioned on Match and Starbucks. When it crossed that 20 weekly, you had a little bit of Go to the weekly chart. Oh, you're on the daily chart.
I thought that was weekly. So that's weekly.
Weekly. So that's when I dumped. It's just it just.
You've crossed the 9 now. You've crossed the 9, but you're getting in this broad pinch. It's a complicated pattern, actually.
It's got nice.
It has my interest again. I'll say that much. It does have earnings coming up what is it, this week or next week?
It's on the 7th, coming up
next week. So it's coming up next week. So it has my interest, but I'm not going to do anything with it until after earnings. Hopefully we can get some positive earnings out of that, because as a company and the fundamentals itself, like I really do like this company. It got beat up recently, but overall, I like their marketing strategy. I like their plan. I like
that's what I was going to say.
They target their target audience, all of that. I really do like the way that they run that company. So I'm looking to get back in this. It's not, I didn't give up on it when I exited my positions. I just knew that I wasn't going to hold it for that ride down. I chose to exit rather than buying puts on it, just so I could focus on another company. But Planet Fitness, you have my attention again. Waiting for that signal.
Yeah, they have a great marketing strategy, and they were Motley Fool's top pick recently too for their fundamentals and their way their marketing strategy. They're growing and spending money, but they still show profit. They got a great model that's really making the fitness industry look at it.
Well, what is their model? That their subscription rate's so low, you don't feel bad if you don't go to the gym.
Right, it's like $10 a month.
It's $10 a month.
That's wait. So my $100 gym membership that I haven't been using as much.
Well, yeah, you think about it.
Probably should
like,
look into
hey,
that.
And they have some other plan. I'm not sure how it works, but if you don't go for a month, they don't even charge you. So they only charge you like you go once, and they charge you for that month, and you go as many times. But there's like different plans where you're like, you adapt the plan to yourself, or you're like, well, I am stupid not to do this, but there is a police siren in there that if you pose and start showing off, they kick you out.
Yeah. Oh yeah. So if like,
is it really?
Alert, like if you start taking selfies of yourself,
like hunk alarm or something like that, where
you start deadlifting and dropping the barbells. They're like, okay, we don't need you. Take your $10 and flee.
Yeah, you're out. And also, I've never been in one, so correct me if I'm wrong. That they don't have as many like free weights. They're more just machines.
Right, the purple and yellow machines. And
no one can
another
see how much weight anyone's doing. So there's never like that someone trying to lift 100-pound dumbbells or anything, because you don't see it. It's just everything's on a machine.
Well, I like to get my tank top, and right before I grind, check me out real quick. Look at me. But no, it's not a flashy, intimidating place, and free training. Trainers walk around and help you out. So purple and yellow machines. And you have to buy the equipment from them if you're a franchisee owner. So it's another source of income. So they finance it too to you. So they make it easy for somebody to start a franchise, which, hey, think about it. Not too hard to run a gym business. Really isn't, especially when it's a franchise and they do all the financing and you got to buy everything from them. So they have a lot of sources of revenue. Fundamentally, market plan, you nailed it, Cody. They have a great business plan. It's not just your average, let's start a gym. It's actually looking to change the whole industry. But I've never been in one, to tell you the truth.
Never been in one myself, but yeah, I like their marketing plan. So as a longer term investment, they have my attention again. They did take quite a hit, but this pattern they are showing.
One more thing they do. One more thing that caught my attention. None of the commercials caught my attention until they said they have happy hour. They have pizza and what is it? Pizza and something else on happy hour.
Pizza and protein shakes.
No, it's pizza and pretzels. Pizza and pretzels at happy hour there. Free. It's free to members.
That actually, I don't know a lot about the company, but all of this stuff sounds like they're building a positive culture.
Are you on commission, Gino?
Hey, if they had a McRib night, Mark, you'd be.
He'd be there.
I'd
be sitting on the Stairmaster, dude. There's nothing better than sitting on the life cycle and eating your McRib.
We have a meeting in 20 minutes. I got to prepare for, and by prepare I mean go to the McDonald's 4 minutes away. Get my McRibs, come back to the meeting. So, yeah.
Give me one.
All right. Well, with that, guys, if you like everything, you like the conversation, this was a very informative and teaching halftime report. So, guys, definitely like, subscribe, share, let your friends know that if they want to learn how to trade, this is the place to do it.
And listen, it is a great swing trading environment right now. Like, I mean, for the first time maybe in a while, that breakout. Step system, pro membership. If you want to know to swing trade, email me at Team of Tackle Trading. I'll get you a step system, free trial, pro membership, free trial. Email me at Team of Tackle Trading. If you want to learn to swing trade, I mean, we haven't had this good of market conditions potentially since earlier this year. This is a good time to learn how to swing trade.
All right, guys. And with that, become a pro member, sign up, click link below, or email Mark, as he said. Until then, guys, we are out.